In today's top financial developments, President Donald Trump continues to command the loyalty of corporate America. CEOs are increasingly cautious around the administration, with industry leaders across tech, finance, pharma, and manufacturing seeking to maintain favorable relations. Apple CEO Tim Cook pledged an additional $100 billion investment to boost U.S. supply chains, in line with Trump's reshoring campaign agenda. In return, Apple was granted an exemption from new tariffs on semiconductor imports. However, not all tech leaders have received the same treatment. Intel's CEO Lip-Bu Tan came under fire from Trump, who suggested Tan had conflicts of interest, possibly linked to China. The accusation followed concerns raised in the U.S. Senate, leading Intel shares to dip. Meanwhile, other business leaders are reportedly anxious but restrained, with one pharma executive admitting the sector is petrified of backlash, illustrating the tense climate for corporate governance under Trump. Elsewhere, companies struggling on performance are buying Bitcoin in efforts to prop up their stock prices. This has drawn scrutiny from analysts who warn of potential systemic risks if the market turns. It's part of a larger trend of financial desperate measures meeting speculative assets in volatile times. On monetary policy, the Bank of England narrowly voted to cut interest rates to 4%, amid deepening worries about sticky inflation in the UK compared to its peers. In the US, President Trump has put forward Stephen Miran, a loyal economic advisor, for a role at the Federal Reserve, a move likely to stir concerns about the Fed's independence. Meanwhile, geopolitical tensions flared as Germany halted arms shipments to Israel, reacting to Netanyahu's push to intensify the Gaza military campaign. The halt is likely to strain Berlin-Tel Aviv ties and adds to global unease. In commodities, U.S. gold futures soared to a new all-time high of $3,534 per ounce after the Trump administration surprised markets by imposing tariffs on gold bar imports. The move has stunned traders and further underscored the aggressive trade policies driving market volatility. In private equity, KKR has restructured payout terms with institutional investors to give more lucrative shares to wealthy individuals in upcoming deals. This shift reflects the growing influence of retail capital in high finance. And finally, OpenAI has officially launched GPT-5, its latest and most powerful AI model, which CEO Sam Altman claims is a significant leap toward artificial general intelligence. The rollout is expected to enhance applications across industries ranging from legal to finance to education. This financial summary was compiled from reports by the Financial Times, Bloomberg, The Guardian, The Wall Street Journal, Reuters, and CNBC.